In the past week, we saw some pretty significant selling pressure in the market. What does that mean for the future direction of stocks? Are we going to see a more substantial pullback, a crash, or is this a buying opportunity? Well, I will answer those questions and I'll show you how to answer those questions as well. We're going to look at the leading stocks in the market and what those are telling us. I'll take a look at NVIDIA, Tesla, Apple, and then I'll show you how to take advantage of market weakness using, again, history as our guide. So let's dive right in and take a look first at a chart of the S&P 500, the daily chart of the S&P 500. And if you look here, we can see the weakness of the past week, but we also see that on Friday there's that green candle there. And what that means is that the market was weak in the morning, but it came back to close above its open. And that's a very good sign that we'll get a little bit of a reversal into next week. In other words, next week we should move higher. Another positive sign for the market is if I draw a trend line across these rising bottoms here, let me draw that better. So if I start here, draw a trend line across these bottoms from here to here, you can see that we're bouncing off of that trend line. What I see in the market right now is essentially building a base. The market had this great upward move, and then it's gone sideways for the last 3 months, and it's compressing in volatility. In other words, the volatility over here is more than the volatility over here. And that process of volatility compression is important because it's like a coiled spring. And when the coiled spring breaks, it can break out and continue the upward trend. Now, I will be concerned, I'm not yet, but I will be concerned if we start to move down through this floor, if we break that upward trend line. If that starts to happen, then we're going to get more defensive. And that's when we can think about looking for buying opportunities. I don't think we've had significant enough weakness yet to really do that. But let's take a look at some of the charts of the biggest and most widely held companies. This is the chart of Apple. This is the weekly chart going back 3 years. And what you can see is that the trend is up in the very long term. I can draw an upward trend line like that, but the shorter term trend was actually broken last month. And here's my concern is that we're building this falling top, and falling tops after the break of a trend line like that can often lead to more weakness. So a little bit of a concern in Apple. It's not a big deal yet because we are still holding this low, and as long as we hold that low, we're fine. But that's one thing to watch for. What about Tesla? Well, Tesla has had some significant weakness with, I would imagine, Elon Musk's alignment with Trump and some of the things that are happening, alienating some of their customers who maybe aren't Trump supporters. But we see here what we call a bursting bubble candle. This is the candle where for the week we hit a new high, but we close below the open. That was an aggressive sell signal. When you have a trend that goes parabolic and you make a bursting bubble like that, you often get weakness. Well, obviously it's too late to take advantage of that now, so what's next? Well, the next thing we want to do is draw the trend line, which is something like that, and you can see that we are very close to that trend line. So I think we have a good chance of seeing Tesla bounce back, and I would consider this to be a potential buying opportunity in Tesla. Maybe not Monday morning, but if we start to see the market for Tesla break the downward trend line on the daily chart, then there may be an opportunity there on that stock. What about NVIDIA? Well, earnings were pretty good this week, as they always seem to be for NVIDIA. The problem with NVIDIA is that expectations are very high. Yes, the earnings are good, but if everyone expects them to be good, then it's already priced in, and you're seeing that sort of be a problem for NVIDIA the last 6 months. We've been generally going sideways, and that's because the company is just really barely beating expectations. And my concern here, like on Apple, is that we have this falling top building, and we recently broke the upward trend. Now we're building a falling top. That is the sign of a market that's getting toppy. And if we start to break down through this low point, then we have some difficulty. Now, the last thing I want to show you, and we'll just jump into the Stockscores website, and I'm just going to bring up a very long-term chart of the S&P 500, SPY is the symbol, and we're going to go back 3 years. The opportunity in the market when there's weakness is to either buy at the trend line, which is where the market's at right now, but I wouldn't do that just yet because I do think we're more likely just to go sideways for a little while. But when you have a market that's trending downward and then you build a rising bottom and then break up from a rising bottom, that is a great opportunity to buy bargains. We are a long way from that because we're really not in a downward trend yet. But going forward, if we ever see this again, where you have these pullbacks, breaks of pullbacks in the upward trend, like there, or reversal patterns where you break a downward trend line from a rising bottom, those are great buying opportunities. All right, well, let's get into the normal market analysis now. And of course, I just want to remind everyone that my website, stockscores.com, is free. Much of it is free. If you go to the website and click on the See More link here, you can register for my free weekly email. You'll get one email from me a week, no spam, and I teach you a little bit about the market, make some stock picks. You can also pull up individual stock scores, and if you want to learn more about how to use the stock scores, indicators, and charts, there is a little section here right from the homepage to do that. We also have some upcoming events in March. These are free as well. I'm going to have a 4-part series teaching you how to analyze stocks, how to be a better investor through the Creating Wealth webinar, how to be a day or swing trader with the Winning Trading Strategies webinar, and then I'll show you my tools and the educational products that we offer at Stockscores. That's all free. Register for those from that Stockscores homepage. All right, well, let's get into the general market analysis. Now we'll start with the S&P. We've already sort of discussed this one, but it's in a nice upward trend, but the last 3 months kind of taking a breather. What that means is that the market's not really helping us. It's not bad, but it's not particularly good either. And in that environment, you have to go in search of what we call alpha stocks. Alpha stocks are those that outperform, that are trading on their own story, and they're characterized by abnormal volume. Now, I will show you an example of an alpha stock at the end of the video when we look at the trade of the week, but those are the areas where you want to focus, or just trading the momentum of stocks that are in upward trends. And there are stocks out there like that that are doing quite well. But some of those tech companies like NVIDIA and Apple that I showed, little toppy maybe, a little bit likely to just go sideways for a little while. Let's take a look at the NASDAQ 100 where a lot of those stocks are listed. And there again, you can see that weakness last week, but encouraging that we came to support and we're bouncing off of it. I do think the tech market is underperforming the broader market. There seems to be a little bit more desire to take profits in those big companies, but still not terrible. If we look at that 3-year weekly chart, where you are in that long-term upward trend, it's the short-term chart where you see that little bit of weakness that we maybe lower the rating now to neutral because of that. How about the Canadian market? Actually, let's take a look at the small caps first. IWM is the small cap market, and this sector of the market has underperformed the large caps because interest rates remain relatively high in the US. It too has had a bad week. It too made a reversal signal on Friday. And so I think it's probably going to snap back from being oversold, much like it did here. We had this, what I call a dead cat bounce candle, where you sell off and then you manage to close above the open. Here we sold off and we closed above the open on Friday, right at that support zone. So we should see this bounce back next week, but until we break this downward trend line, ideally from a rising bottom, we don't want to get too cocky with the small caps, just maybe some short-term buying opportunities in some that are oversold. Let's move our attention to the Canadian market now, T.XIU. And there you can see not as bad weakness on the Canadian market this week, a little bit, but still holding that upward trend line. It, like the S&P 500, is in this sideways pattern of compressing volatility, like a coiled spring. If we can then break out through resistance, we should continue higher. If we start to build falling tops and break the upward trend line, then I'm going to put a little bit more of a bearish rating on there. And make sure you're subscribed to the channel here, because I'm doing these videos every week and I'll keep you updated on that. Let's take a look at gold. Gold has obviously had a great run, but with some strength in the US dollar last week, we see gold selling off a little bit. It's not really a break of the upward trend in the long term. If we look at that 3-year upward trend line, it's still strong, but it's due for a little bit of profit taking, much like we had here and here. You go sideways for a month or two, go down for a month or two. We're probably due for that again because gold has run away from its trend line. I would expect it to come back to that trend line. And so in the short term, a little bit of a negative outlook, but the long term is still positive. What about oil? It has really underperformed, and you can see over the last month and a half, 2 months, it's really underperformed as we sell off. So it's bearish in the short term, but the long-term picture still isn't bad. It's stable. it generally has rising bottoms. It's just got this resistance zone, and when it hits that price peak, it always gets stuck. And we're seeing that again. So it pulls back, it'll probably bounce back soon, make another stab at that long-term resistance. But until it breaks out, you want to be fairly selective with the energy stocks. Let's take a look at the US dollar. UUP is the symbol, and I said that US dollar had a bit of strength last week, and that was a little hard on gold, just a little bit there, but it makes gold more expensive, and that would be one reason why gold had a little bit of profit taking last week. The general trend, if we look at the 1-month chart for the US dollar, is still somewhat negative. It broke this steep downward trend line, so perhaps we can think about it being neutral, but it's still not super optimistic. On the 3-year weekly chart, you can see that we've got bottoms rising towards resistance, and we just need to see a breakout through that. Next up, let's take a look at the chart of TLT, which is our bond market chart. And there you can see good strength in the bond market, and we just need to get this downward trend line broken, which has happened. We've built a rising bottom. Now we should come up into here. This is very important for stocks and very supportive, particularly for the small cap stocks, because it's a sign that interest rates in the bond market are starting to come down, which is a positive for those small cap stocks. And I think that the market hasn't really paid attention to this factor this week, so we should see this turn around and help the market overall. All right, so let's take a look at my ratings then. Neutral short term and bullish long term for US large cap and NASDAQ. On the small caps, bearish in the short term but neutral long term. Canadian stocks and gold, neutral and bullish. Oil, bearish short term but neutral long term. US dollar now neutral on both time frames. Bitcoin bearish in the short term and bullish in the long term, and bonds short term bullish and long term neutral. All right, now it's time for the trade of the week. Earlier in the video I talked about alpha stocks. These are the stocks that can move on their own story, and they're characterized by abnormal volume. And so what I like to do is look for stocks that are doing exactly that, trading abnormally, making gains that are abnormal. In this market, it's mostly for very short-term trades, but as the market starts to improve, if we hold these upward trend lines, then you'll see it broaden out to the swing trades and the position trades as well. Here's an example of a day trade from our Active Live service that we found on Friday. It started to behave abnormally pre-market and then came into the normal market session very strong, and you can see the volume was very abnormal. That tells me to watch the stock. Now I have a couple of different strategies that I apply once I have a stock that's doing that. And again, register for those free sessions in March, because I'll teach a little bit more about this. Each session is about an hour long, and we'll go into much more of the detail about how I do this. So again, these are free. Just register for them at stockscores.com. But one session or one entry point there is, see how these blue dots here, and we have this little candle breaking this pullback. So once I see a blue dot, I look for the break of the pullback. And so that was entry point number one. Well, it took a long time. It didn't get stopped out because support is there and the stop would be about there, but it took a while. Then we got a confirming signal right there. That little yellow and pink dot is what I call an action candle. And I love it when they break from low volatility. This one's also good. If you have this one here, but it's not breaking out, so you always have to look to see if the pattern is actually breaking out from low volatility, which happened here, right around $5.20, $5.10. And as the market rose into the close, we see that stock move up a whole $1 per share, giving you a 20% return for a couple hours hold on a relatively quiet trading day on a Friday. Hope you've enjoyed this week's Stockscores Market Minutes. If so, click the like button. Leave a comment. Do you think the market is going to bounce back next week, or are we going to see more weakness? Love to hear your thoughts on that. Make sure you're subscribed to the channel. Hey, it's free. I do these videos every week, and I'm going to try to add a few more in the next couple of weeks to get through this little bit of a rocky period for the market. Hope you've enjoyed it, and as always, trade well.